Welcome, you curious minds, to the deep dive. Today, we're cutting through the buzz around a topic that promises to revolutionize your trading, leveraging AI for cryptocurrency. But is it maybe too good to be true? We're diving deep into one individual's, let's say, bold claims of turning around his trading fortunes with automated bots in under 5 minutes to understand what it really means for you.
Yeah, it sounds really compelling.
Our source for this deep dive is excerpts from a YouTube video. It's called Free AI Crypto Trading Bot Setup in 5 Min. No experience needed, from the Crypto Banter channel. The speaker in the video, David, makes some pretty significant claims. He says he went from being, and I quote, the worst trader in the world,
Wow.
to consistently profitable thanks to these bots. And he even promises you can set up your own with zero code knowledge in just a couple of clicks.
It's an immediately compelling proposition, isn't it? Automation meeting the high-stakes, often chaotic world of crypto trading. But that immediately brings up a critical question. Can these tools truly simplify and de-risk something as complex as market trading for the average person?
Right.
Or are we just, shifting the complexity somewhere else? We'll be scrutinizing the journey, the tech, and the specific claims made here.
Okay, first, let's unpack David's personal journey a bit. He openly admits to being the worst trader out there, making like classic mistakes, things like FOMOing in at the tops, that's fear of missing out, buying high out of anxiety and moving stop losses.
Oh yeah, chasing the losses down.
Exactly. Adjusting your exit points lower, hoping it turns around, but often just leading to bigger losses. He talks about spending day in and day out on my computer watching charts and Twitter,
Been there.
with his profit just dwindling away. He'd been in Bitcoin since 2017, apparently, but still struggled even after reading all of the books.
David's story isn't just like a relatable tale of human error. It really highlights how even people who've been in the space for a while can fall into these psychological traps. FOMO, overtrading. The real insight here, maybe, is that AI's advantage isn't just speed or data. It's the total immunity to those very human feelings, right? Emotional discipline is sort of baked in.
That's a good point. It's not learned, it's inherent in the machine.
Exactly.
So he turned to bots, but even that wasn't smooth sailing at first. He mentions earning passive income thanks to a DCA strategy.
Okay, dollar cost averaging. Yeah, some sense.
Yeah, investing fixed amounts regularly to average out volatility. But, and this is key, those bots weren't back-tested in the slightest.
Ooh, risky.
And here's where it gets really specific. His bad experience involved the lunar crash. His DCA bots just blindly bought all the way to the bottom and pretty much sunk all of my profit from the bull run.
Ouch. That must have been...
Yeah. Sounds like a devastating turning point.
It really was.
Yeah.
And that Luna experience, it's such a crucial lesson. It really shows the limits of a strategy, even one that sounds good like DCA,
Right.
if it's not validated properly.
Right, without back testing.
Exactly. It underscores the danger. You have to understand the limits and risks, even with automation. It wasn't just losing money. It was like a massive wake-up call for him.
Yeah.
It sparked this, deep need to figure out why it failed and how to stop that kind of automated disaster. That frustration really became the catalyst.
So he learned to code.
Yeah, learned to code, built a community around solving this exact problem, turned his failure into like a collective effort over the past 3 years.
So what did they create? He introduces the David Tech website, claims it has over 1,200 strategies.
100, wow.
And you can see these equity curves, visual charts, showing how a strategy's capital performed over time. He also mentions a school with crypto banter for, learning more about choosing the right bot.
Well, a key takeaway here seems to be the focus on data and transparency, or at least claimed transparency. The site provides both backtesting, that's performance on historical data, shown in green in live trading, real-time performance, shown in pink. That's pretty critical for trying to verify performance.
Great.
They also show monthly P&L, profit and loss, and apparently even an audit from TradingView with forward testing, back testing, and screenshots. They're trying to disclose a lot to build trust.
And they even have, get this, an AI agent that apparently will go through the actual strategy and tell you how he believes that it can be traded or improved.
Okay, that is pushing the boundary.
Yeah.
An AI analyzing strategies.
But how much transparency is there into how that AI makes its suggestions? Could it be a bit of a black box, and what risks does that introduce if you don't get the logic behind it?
That's precisely the right question to ask. I mean, an AI suggesting improvements is innovative, sure, But you need to understand its methodology. Is
Yeah.
it just rules?
Yeah.
Is it a complex neural net? Because the more opaque it is, the harder it is for you, the user, to grasp potential flaws or react if the market suddenly changes in a way the AI didn't expect. An audit often just verifies the data was handled correctly, not necessarily the intelligence or robustness of the AI itself.
Good point. Okay, now let's dissect this setup process. David calls it a very simple system. Connect your exchange to the bots with just a couple of clicks.
The big promise again, simplicity.
So step one, connect your exchange, like Bluffin he mentions, using API keys. These are basically, digital keys allowing the bot to trade for you without giving it full access to your account.
Secure connection, yeah.
And he stresses the importance of fees. For algo traders, or trading in general, he says you can save up to 20% on fees using certain links.
So that really highlights something often missed. Transaction costs. Even tiny percentages really eat into profits, especially if bots are trading frequently.
Absolutely.
Saving on fees genuinely can be a competitive edge.
So once you're connected, you pick a strategy on the David Tech site, click Copybot. He shows you can emulate a backtest on your actual exchange with the amount of money that you actually have.
Okay, so personalized backtesting.
Yeah, and you can dynamically update things like leverage amount using borrowed money to potentially boost returns, but also risk and margin amount,
Yep.
the collateral for that leverage. And you immediately see how those changes affect the max drawdown, the biggest drop in your capital, and the potential net profit. Then you agree to terms, click Activate Bot. He repeats, literally is how we create a bot in a couple of seconds.
Huh.
Now, that speed is impressive, but does that ease maybe make people overlook critical risk stuff or understanding the strategy properly?
Oh, it absolutely could. Being able to tweak leverage and instantly see the back-tested result is powerful, right? It encourages experimenting, assessing risk before you commit capital.
Yeah.
But the sheer ease could also create a false sense of security. Clicking buttons quickly doesn't replace needing to understand the strategy, its assumptions, how it might react when markets go wild in ways the backtest didn't cover.
Right. It lowers the technical hurdle.
But not necessarily the intellectual one.
Exactly. Okay. Then he strongly advocates for creating a bot army, having multiple bots, diversifying across multiple coin pairs, using different strategies, different markets.
Diversification, a classic approach.
He claims this will reduce your map's drawdown and help you be diversified in different market conditions. Sounds good in theory, but what are the potential downsides of running, tons of strategies at once?
That's a really vital point to consider.
Could it increase the risk of, say, over-optimization? Or just make it super confusing if things go wrong, like which bot failed and why?
Yeah. Diversification is fundamental in traditional finance for sure. Applying it via bot army in crypto makes sense to try and spread risk. You're not putting all eggs in one basket or one strategy. But the downsides you mentioned are very real. Managing too many strategies gets complex fast. There's definitely a risk of over-optimization where a bot looks perfect on past data but fails live because it's too tuned to history. And yeah, imagine trying to figure out why your overall profit is down when you have, say, 20 bots running. Debugging that could be a nightmare for an average user, even with tools.
He does show a transparent example, though, from his own Bybit account. A $10,000 account grew to over $16,000 in about 180 days using one of these bot armies.
Okay.
Even though it was in a bit of a drawdown when he filmed, he emphasizes doing it all transparently on YouTube.
Look, transparency with live results is definitely a positive sign, especially in crypto where claims can be wild.
Right.
But while that specific result over 180 days sounds good, the deeper question is, in crypto's volatility, is 6 months really enough to prove long-term viability?
Good question.
And does transparency also mean showing the worst-case scenarios, the risks behind the models? What does audited by TradingView truly guarantee beyond data accuracy, especially with things like smart contracts and flash crashes possible? It's the full risk picture, not just a snapshot of success, that matters.
Right. Context is everything. Beyond just the bots, David also highlights the community aspect. A full community where we're all discussing and building and improving upon these strategies, all inside of Discord.
Community support.
He also mentions a free course with crypto banter and workshops twice a month, including AMA sessions, to help people get their first profitable bots up and running.
You know, that emphasis on continuous learning and community support, that's genuinely valuable. In a market like crypto that moves so fast and has high stakes, knowledge is powerful, but it's most powerful when it's discussed, questioned, applied together.
Yeah, bouncing ideas off others.
Exactly. A community gives context, different views, a feedback loop that you just don't get trading alone. It helps users navigate the complexities that go way beyond just clicking Activate Bot.
So wrapping up, you've heard David's story, his AI bot solution, the platform he built. It's definitely a compelling narrative, turning personal trading struggles into this automated system, promising ease and no coding.
Mm-hmm.
But as we've kind of unpacked, the devil's often in the details, isn't it? The convenience seems to come with new layers of things to think about.
Yeah, this deep dive showed us an interesting angle on using automation in crypto.
Hmm.
The potential for consistent profit, passive income. It's undeniably appealing. But it also forces us to ask important questions. Does the simplicity just shift the complexity elsewhere? What about real risk management and the need for, ongoing vigilance even when tools are automated?
This approach certainly offers a path for people wanting to engage with crypto markets without, being glued to charts 24/7.
Yeah.
It's an interesting mix of accessibility and pretty advanced tech.
Which kind of leaves us with the final question for you to think about. If these automated AI tools can theoretically manage your financial decisions, what becomes the most valuable human skill in navigating these volatile markets?
Hmm.
Is it understanding the AI itself? Is it overseeing its performance closely?
Mhm.
Or maybe just knowing when it's time to step in and pull the plug?